welcome back for the next episode of our Ultimate Lease Accounting series. Previously, we covered the definition of a lease and went into further detail on how ASC 842 places new emphasis on the concepts of an identified asset and the right to control that asset. We also went through how to tell if a contract contains a lease and uncovering your embedded leases. So during this video, I'll highlight some lease basics, including locating the key dates in a lease agreement and using them to determine the lease term. Let's dive in. Let's look at some of the dates which may be present in a lease agreement. First is the commencement date. This is the date the lease begins. Sometimes a lease will have a contractual commencement date, the date the lease begins per the contract, and then maybe a separate lease, a commencement date for accounting purposes. Let's look at some of the dates which are present in a lease agreement. First, the lease commencement date. This is the date the lease begins. Sometimes a lease will have a contractual lease commencement date. This is the date that the lease term begins per the contract, and then a separate accounting lease commencement date. The lease commencement date for accounting purposes is going to be the possession date. The possession date is the date the lessee takes possession or control of the underlying asset. The contractual commencement date. The contractual commencement date may or may not align with the possession date. The lessee will always record the lease on their possession date. The lessee may gain control of the asset before the commencement date stated in the contract, before the lessee is required to begin making payments, or even before the lessee begins using the asset. However, none of these have any bearing on when the lessee is recorded. None of these have any bearing on when the lease is recorded. If the lessee has control or access of the underlying asset, then the lease is recorded on the balance sheet. Lastly, the lease end date. This is a bit more straightforward. This is the date the lease term ends. The lease end date may be extended if renewal options are exercised, but there's always a specific lease term, and then that specific lease term has an end date. So for further help in locating these key dates, let's talk about where they might be found in a lease agreement. The contractual lease commencement date is usually specified near the beginning of the contract, though sometimes the lease contract specifies that commencement does not begin until a specific action, such as construction or the transfer of keys, has been completed, though a specific date may also be used. The possession date may not be stated in the lease term, or it could be stated in the lease term, but then the tenant actually obtains access or control to the asset at a different date than stated. Regardless, the possession date is always going to be the date the lessee physically obtains access to the lease asset, and then the date on which the lease is recorded to the balance sheet. The possession date may not be stated in the lease, or it could be stated in the lease, but the tenant actually obtains access or control to the asset at a different date. The possession date will always be the date the lessee physically obtains access to the lease asset, and then the date on which the lease is recorded to the balance sheet. The lease end date may be defined in various ways in a lease agreement. More commonly, it is stated as a specific date or a factor of the lease start date in the term. So an example you might see of this is the lease starts on January 1st, 2024, and then ends 60 months or 5 years after commencement. So that puts the lease end date on December 31st, 2028. The lease term is the period of the agreement between the lessee and the lessor when the lessee can use the leased asset owned by the lessor. The lease term for accounting purposes starts from the lease possession date and extends until the lease end date. Determining the correct lease term is imperative because the term impacts the classification of the lease and the measurement of the lease liability and right of use asset. The total lease term is similar to a formula. It's depicted here by this graphic. The formula is made up of 1, all non-cancelable lease periods, 2, any optional renewal periods the lessee is reasonably certain to exercise, Then any periods covered by a termination option the lessee is reasonably certain not to exercise. And then lastly, any periods to extend or not terminate the lease that are controlled by the lessor. Add all of those up for your total lease term. So to determine the lease term, the lessee needs to be familiar with the concept of reasonably certain. Reasonably certain is a relatively high threshold. The closest definition in reporting would be reasonably assured, which is defined as a 75% likelihood. To establish the total lease term, the lessee must determine how far into the future they are reasonably certain to continue renewing their lease or make any other of the lease option elections. So in reality, the further you move into the future, the harder it becomes to be reasonably certain about decisions. The analysis for whether or not options will be exercised needs to include an analysis of economic incentives. Some of these would be, is there a penalty if you terminate the lease early? Is the landlord offering lease rates below market if you extend your lease with them? If you were to terminate your lease, what would it cost to have another leased asset operational or to move into another property? And then historical analysis. What options have you commonly exercised in the past? Have you always been in this one particular location? Have you always renewed equipment leases for a specific period? Another question would be, does your organization typically renew your lease agreements, or possibly you enter into amendments to the agreement before you actually put any of those renewals in place? So pretty straightforward. A short-term lease is a lease with a term of 12 months or less at commencement, and a long-term lease, in contrast, is a lease with a term exceeding 12 months. A couple points to consider when determining if a lease is short-term or long-term. So the analysis needs to be done at lease commencement, not when you're transitioning or another time. So if you had a 5-year lease, but at transition there's only 6 months left on that lease, this is still not a short-term lease at transition because it was not short-term when it commenced. A lease cannot qualify as a short-term lease if it has options to extend beyond 12 months and the lessee is reasonably certain to exercise those options. And then also a short-term lease can have a purchase option if the lessee is reasonably certain not to exercise the purchase option. One of the reasons it can be important to determine if a lease is short-term or long-term is because of the practical expedient offered by ASC 842, which allows the lessee to elect by class of underlying asset to not recognize those short-term leases on the balance sheet. However, note that the income statement of the short-term leases not recorded on the balance sheet is required to be disclosed in your year-end disclosures, so you should find a mechanism for tracking your short-term leases. Some lease agreements do not have easily identifiable lease terms. However, as with all other leases, the lessee establishes a lease term by considering whether they are reasonably certain to exercise whatever options are offered by the lease contract. For lease agreements offering month-to-month renewals, the lessee reviews all the circumstances related to the contract to determine how long they expect to continue renewing the lease. For example, if a piece of equipment is leased to support a construction project, either weekly or monthly, the lessee may establish the lease end date as the date they expect the project to be completed. Evergreen or perpetual leases are called this because they renew automatically for some period far into the future, or perpetually until the lessee terminates the lease. As with a normal lease, the lessee still reviews the contributing factors to make the reasonably certain judgment as to when they expect to exit the agreement. So something to consider here is the renewal time frame. If a lease renews automatically far into the future, like for the next 20 or 30 years, like we discussed under reasonably certain, the farther out into the future you look, the less likely it is for the lessee to be reasonably certain they're going to renew. On the other hand, the lessee could probably make a case for being reasonably certain for the next 1 to 2 or 5 years, whatever that time frame the lessee decides upon. They document the determination of the time frame, the reasoning behind it, and then use that to establish the lease liability based on the judgment. And then lastly, a purchase option is defined as an option to purchase the underlying asset of a lease at the end of the lease term. The presence of a purchase option is one of the conditions that may distinguish a finance lease and an operating lease. Like the other lease options, factoring the purchase option into the lease term is dependent on whether the option may be reasonably certain to be exercised by the lessee. So if this option is reasonably certain to be exercised, then the agreed upon date, the ownership of the underlying asset transfers from the lessor to the lessee is the end of the lease term. And then lastly, when it's reasonably certain a purchase option will be exercised, this also results in classifying the lease as a finance type lease. So let's apply this new lease date knowledge to determining the lease date for example 3 from the Ultimate Lease Accounting Guide. So how to determine the lease term. Tenneco has entered into a lease agreement on September 15th, 2021. The lease agreement stipulated that commencing on February 1st, 2022, the tenant would begin making lease payments. Tenneco was given the keys to the property on January 1st, 2022 to begin making some leasehold improvements, painting and updating some fixtures. And then they moved into the building and began operations on March 1st, 2022. The lease term is 5 years with 2 5-year renewal options, both of which are reasonably certain to be exercised. And then lastly, Tenneco also has a purchase option for $100,000 that is reasonably certain to be exercised. So given those facts, what is the lease commencement date? Is it the lease execution date of September 15th, 2021? Or the tenant is given the keys to the building to begin leasehold improvements on January 1st, 2022. The contractual lease commencement date is stipulated as February 1st, 2022, but Tenneco does not move in or begin operations until March 1st, 2022. So the correct answer is going to be January 1st, 2022, the access date. Even though the contract says the lease payments begin on February 1st, access or control of the space was given on January 1st, so that's when Tenneco would record the lease for accounting purposes. So next, once you know the lease commencement date, determining the total lease term is easy. So we just determined that the lease begins on 1/1/2022, so we won't include the lease execution date in the lease term. The first 5-year term goes until December 31st, 2026. And then in that previous background slide, we said Tenneco was reasonably certain to take the first renewal for 60 months, and then reasonably certain to also take the second renewal for 60 months. This puts the total lease term at 180 months. This is the time period we'll use in the calculation of the lease liability and for the lease classification analysis.